that time on the show when we get you all the buzz on D Street. Time for all the khabar. Avalon Tech's anchor investor shares will be out of lock-in as we understand, and selling is expected on the back of this particular news. Sharad is here with all the details on what's likely. Sharad?
Well, yes, in focus we are having Avalon Tech, and today is the day where the anchor shareholders will be coming out from the lock-in period. Now, roughly 7.7% stake of equity will be coming in the markets, and what we are hearing from the dealers is that selling is expected to kick in from the anchor investors, and there are key investors who are already invested in the company, and the names include Unify Financial as well as India Account Fund. Now, the stock itself is up 42% from its listing price. However, the listing itself, that was on the muted portion, with a discount of roughly 1% coming in at almost 431 rupees per share, and currently the share price is more than 600 rupees. Apart from this, also do remember that the company is a direct play when it comes to electronic manufacturing services, and this theme has been buzzing off late, and also the stocks related to this theme, they have also been rallying. The company recently met Goldman Sachs as well as for the investor meets as well. Now, recently a lot of broking houses have also started initiating coverage report on the company as well, and the management's commentary was coming in that they aspire to double the revenue over the next 3 years itself, and they also expect the margins to go up by more than 13%. That indicates roughly 200 and 300 basis points margin improvement in the long term. And do remember, 2 new facilities are coming up for the capacity expansion over the next 6 months, and currently is roughly 65 to 70% of capacity utilization is happening. And one more important thing is that company has a vertical integrated facility. That means the margins going ahead would turn favorable. That's what the analysts are stating.
Okay, Avalon Tech. We'll definitely watch out for that counter. The lock-in opens today. Let's see whether there's any selling pressure or not. But talking about selling pressure, that seems to be the case on Vedanta right now. In pre-open, that stock is suggesting a cut of almost 3%. KPIT Tech is not far behind, given that JP Morgan note, which is calling for further derating. So that stock is likely to open on the back foot as well. But what could be some of the winners today? Mazgaon Dock, after the solid traction that we saw yesterday, is also likely to open up in the green today. The entire defense pack, there's an initiation that happened from Midcap, plus that impending meeting of the Prime Minister to a visit to France is something which is also on the anvil. APL Apollo, which had signed an order, I believe. And then you also have PCBL, Vijaya Diagnostic, as some of the other counters. Reliance, that heavyweight, is again likely to start with a gap up. 27.79 thereabouts is what that particular stock is suggesting at this point of time. You also have a big winner coming in Tata Motors, likely to start on the front foot itself. Kunal, Naresh, what are the stocks that you are spotting with respect to the pre-open rates? Kunal, expecting a move on Reliance, and which other stock?
Well, yeah, Reliance is one of the stocks, prime stocks, which I would be keenly watching out for, because I believe that yesterday's breakout was a very strong indication that the stock could surpass the lifetime high levels as well. So the momentum coming back for Reliance Industries is something which is quite noteworthy. So that's a stock which I would stick to from the large cap name. And from the other names, one of the sector which has actually started to buzz over the last couple of days is metals. So I think even the likes of Tata Steel, JSW Steel, Hindalco, many of these stocks have given classical signs of breakout. And from the large cap names, even SAIL is looking attractive, closer to 90 plus levels. So many of the stocks within the metal sector also would be looking attractive. That's a space which I would definitely keep an eye on.
Okay, metal stocks looking good on the charts. And Naresh, let's get in a take on some of these stocks that witnessed a pretty smart volume breakout yesterday. You had something like a Gland Pharma that really stood out, as well as a Prism Johnson. Your view on the charts?
So Gland Pharma is something which is still in a long-term downtrend. The stock has corrected from 4,000 levels all the way to 1,000. So not really, I would consider it to be a just one-day move. It did a move in April, and then again corrected 20-30%. So it has a long time to go before it bottoms out. Prism Johnson is interesting. It has again fallen back from that 135 mark as such. But overall, still not looks like a one-day move. So for now, both of these stocks are not really interesting.
Okay, fair enough. Meantime, let's get in your thoughts, Kunal, on the charts when it comes to these defense counters. You've always been bullish on the likes of an HAL, etc. How are they looking on the charts after already seeing a run-up? Any fresh buys?
Well, not a fresh buy, Avan, but I think these stocks have gone through a time-wise correction. So HAL, BEL, both these stocks specifically from the defense pack have been going through a patch of consolidation. There have been minor breakdowns on the charts for these stocks, but then that's part and parcel of every phase these stocks have gone through, and especially after such a kind of a steep or a strong uptrend. But I would believe now that many of these different stocks, because they've rallied so significantly or in a strong manner in the last few months, that these stocks have to now try and digest the gains as well as go into a consolidation. So it makes a lot of sense to wait patiently,
Oh, we
get
seem
into
to
a
have.
corrective on dips. A 10% dip, for example, or a 10% correction is a very good zone to go for a buy on HAL. BEL, for example, if it comes back towards 115 mark, that's a classical territory to go for a long on BEL. So I would be bullish on these stocks, but then buying on dips is what I would advise rather than buying on momentum, because I'm expecting more of a time-wise consolidation into these stocks.
Okay, let's also tell you what the index calls are this morning and whether or not there's a consensus trade, given that the markets are likely to consolidate. And yes, it's a no trade from both Kunal as well as Naresh, and a hold coming in from Kushbora this morning. The market moodometer then pretty much stuck at no trade from most of our chartists. What about Nifty Bank? It's a similar picture there as well, or a similar call rather. A no trade from both Kunal Bothra as well as Naresh Mirani, and Kushbora is indicating a hold right now, so a no trade from most of our experts there on both the Nifty as well as the Nifty Bank.
Okay, so those are the index calls coming in from our chartists at this point of time, but we'll also have a whole host of other companies which will be in spotlight today. Case in point being the life insurance companies. Yesterday as well, we saw quite a bit of an up move when we got the APE data, and now the life insurance data is also something that we are watching out for. Kunal, Naresh was a big fan of the likes of Max Financial, etc., which haven't moved up. What are the names that you are spotting within the insurance pack, as well as the intermediaries, as well as the entire brokerage AMC pack?
So I think from the insurance pack, that's SBI Life, which I believe looks very attractive, because I remember, I think in 2022 second half, it was SBI Life which managed to outperform significantly as compared to the other peers like HDFC Life, ICICI Pru, etc. So in 2022, the SBI Life was one of the top gainers. Start of 2023, this stock corrected like most of the other insurance name. Many of these stocks, insurance stocks like HDFC Life, etc., had come back to their multi-year lows, but SBI Life managed to protect its multi-year low by a margin of 8 to 10%, if I'm not wrong. So now with the stock is coming back closer to its life high levels, I think the previous high for SBI Life was around 1350, 1330 mark. Right now, it's almost closer to the 1300 levels. So as compared to most of the other insurance names, this stock outperformed previous year as well as has come back quite strongly and is now getting back into a breakout mode. So I would purely look out for this stock as a good buy on dips candidate. I would expect 1350 to be taken out for SBI Life in this leg of uptrend. Now, from the other brokerage space, the sector which you mentioned, I think Angel One is something which looks extremely attractive. The stock, I remember, I think beginning of last month, had managed to confirm a breakout above its 200-day moving average, just on that 1350, 1400 mark. And from there, the stock moved up another 400 points in just a matter of few weeks. It's just that in the last, I think, 2-3 days, the stock has seen a mild correction from 1800 to 1700, slightly below those levels. But I believe that with this recent rally and the strong pickup of price action, Engine One should surpass the previous highs of 2000 approximately. So would be bullish on the stock and expecting that any dips should be taken as a buying opportunity for a target of 2000 plus.
Just flagging out some of the other big movers in the pre-open, you have Patel Engineering, which is showing a gap up of almost 5%. Remember, we understand that Mr. Vijay Keria has increased his stake there, so that's higher. You have Ugro Capital, which came out with its Q1 update. That stock is higher by 5%. CarTrade, when we talked about that big acquisition that the company has made, is rising higher. It's 7% higher as far as my readings are concerned. Let's see what CarTrade is trading at. And then you also have Butterfly Gandhimati. The volumes are very, very low at this point of time, but nonetheless, showing an uptick of almost 9% as far as that stock is concerned. On the losing end, you have KPIT Tech, which is down 3%. And then there are companies like Jagran Prakashan as well, which are down in the trading session. So these are some of the small cap names that you need to have on your radar once the market starts. We are likely to see that happen in the next 2 minutes itself. And from the frontline index, it is again autos, Aisha, that seems to be on the front foot. Tata Motors, Bajaj Auto, these are the stock, and even Eicher Motors is showing a bit of a green. So after that 11-12% cut that we saw last week, seems like Eicher Motors is finally getting out of the woods.
Yeah, seems to be the case that maybe some respite in buying on dips coming in, or maybe just a dead cat bounce. Who knows? Let's see what the normal trading actually throws up, at least for Eicher Motors. Tata Motors, quite convinced the uptick over there continues. And similar should be the picture maybe for a Bajaj Auto, or for that matter for a Hero as well. Eicher holding up by about almost 0.7%. Bajaj Auto about an 0.8% move coming in. Let's just revisit what Vedanta has settled in at, and whether or not you're seeing weakness trickle in over there. That stock will just come up for you on your screens. And of course, for the overall market, while we continue to remain range bound, and yesterday was only due to Reliance and the comfort and the leg up that you had from the metals pack that you saw, the quiet move that we did. Let's see what the index composition is today, who actually manages to save the day, if at all, for our markets today. We have been consolidating for the last two trading sessions. Actually, Friday was a bit of a dip. Yesterday was quite consolidation and a bit of a sideways session. So let's see where we pick it up from there. Just counting down to the market open then, and bunch of stocks like we've highlighted are on our radar this morning. There's also Mazgaon Dock. That is also one stock which is going to be in focus. We will just highlight reasons why. And then, of course, remember tomorrow you have IT majors kicking in the earnings with TCS and HCL Tech reporting. So those also on our radar this morning. 72 points higher actually. It's well above the 19,400 print. So the start is not bad at all. Let's see how sustainable this looks, because these are just early days. So let's see where it goes from here. Foxconn terminating the joint venture for semiconductor with Vedanta. The pre-open rates itself was indicating a downtick, 2% or less than that actually. 277 is where Vedanta is currently in trade. Let's now see what the likes of KPIT, Persistent, LTTS, Tata Elxsi, etc. are up to. JP Morgan is actually seeing a de-rating potential from even the current levels for most of these names. So they are the ones which are currently in focus. On the positive side though, Gujarat Pipavav, their Q1 update for container cargo volumes has come in strong on a year-on-year basis. That stock holding up 2%, although this doesn't typically clock in very high volumes. Antique note on Cable Kiran Clothing, they've initiated a buy, target price of 805. CarTrade acquisition worth about 537 crore rupees from OLX. And then, of course, chemical companies, how can we not cover that? The likes of UPL and Rallis, especially after FMC has downgraded its guidance. UPL has gapped down by about 2.25% as we speak right now. Nazara Tech, they are looking to raise about 750 crore rupees via an equity issuance. So look out for that. Tata Com, which has acquired the remaining stake in Oasis Smart System for about less than 100 odd crore rupees. That's another stock. Sangvi Movers, a 150 crore rupee order. And then APL Apollo as well, when one of their arms has got an incentive worth about 500 crore rupees from the Chhattisgarh government. That's the other stock which is in focus. And I think today it's going to be a lot about some of these defense names as well. We just made you hear from what Mr. S.N. Subramanyam was saying from L&T. Many newspaper reports are indicating that Mazgaon Dock may have actually bagged an order from the Defense Ministry for 3 additional submarines. That stock has gapped up 6% higher for Mazgaon as we speak right now. So that's another buzzing stock in focus. And what is Reliance then up to? Is it seeing follow through after that big bang move on the stock yesterday? Yes, it sure is. 2750 now already on Reliance. And for the index as well, not looking all that bad.
Yes, indeed. That's what the overall setup is looking like. Let's take it across then to our Chartist to find out what they make of the market move. It's a 1/3% gain coming in across the board actually for all the indices. And it's interesting as well. I want to just quickly mark the Nifty Bank index, because in that pre-open you could see it scaling towards that 45,000 mark. And just a quick look on the Nifty Bank index. Yes, we managed to have surpassed that level. What's the technical significance, Kunal, of this? And what's your first trade?
Yeah, I think 45,000 breaking out of that 45,000 mark would actually be a good signal that the markets may probably have gone into a short-term bottom formation. So we'll have to wait out for say another hour or so to actually sense that whether the index sustains this level or not. But then closer to the expiry, the higher we are towards the psychological level, the better it is. In terms of opening trade, I would still go with Reliance Industries at 2700, 2750 odd mark as a good zone to buy the stock, because my expectation is that the stock could probably come back closer to its previous size, if not surpass those levels.
Okay, let's find out what exactly Nuresh is betting on. And Nuresh, is it large caps that are looking good?
So that would be looking at a large cap only, which is Bharat Forge. The stock has been consolidating around this 845 to 855 mark, close to making a new swing high on a dividend adjusted basis. It has done so right now. So looking at it as a stock which could go towards a new all-time high from here. Stop loss at 840, looking at a target price of 900, 950 here.
Those are the top recommendations coming in from Chartist. We'll let you go and connect with you soon enough. But let's welcome on board Vetri Subramanyam, the Chief Investment Officer at UTI AMC, joining us on the show. Vetri, hi, good morning. Thank you so much for making time and speaking with us. Let's just begin by discussing market itself, right? It's no longer the fact that we are very cheap. We are trading very close to the long-term averages. We're at the cusp of the earnings season, which could go either way. In fact, it's more skewed towards downside than upside for a lot of sectors. Do you see a bit of a risk for the market at this point of time?
Yeah, interesting question. I think two things to think about. A lot of people are reacting, I think, purely to the fact that the market is at an all-time high. Obviously, we're talking about, the Nifty 50, Nifty 500. But really looking at it as an all-time high has no meaning. In any investor's journey, you're going to see multiple all-time highs over many, many years and decades in which you invest. What's more important to see is where is it from a valuation perspective. I would tend to sort of agree with you. The market was in a much better place maybe 3 or 4 months ago. Today, it's sort of getting close to territory where we would start to call it rich again. But it's not as expensive as it was 18 months ago. So if I take you back to October of 21, remember the market is up, just in about 3-4% from those levels of October 21. But earnings have moved up quite significantly. And therefore, on a PE basis, which is the right way to look at the market, choose your own valuation metric that you're most comfortable with. It's not as overextended as it was at that point. Your second question on earnings, I actually think this quarter will still look quite good, because remember, a lot of the chaos related to the Russia-Ukraine conflict actually got picked up in this quarter's numbers last year, right? Because that was February of 22 when the conflict broke out, and then you had this huge spike in commodity prices, supply chain disruptions. So I think while revenue growth itself will be quite moderate, earnings growth, because of those supply chain problems being behind us, because EBITDA margins are now coming back closer to where they used to be, your profit growth itself will look quite strong for the current quarter. But I do think when you think about the full year earnings growth for March 24, then that sort of 20% plus consensus number on Bloomberg that I see, I think that is at a little bit of risk because of all the factors such as weak nominal growth for the economy, high interest rates, and a global context which has still not fully settled down.
Net, what are you saying in terms of the valuation? Yes, we are not close to the peaks that we saw 18 months ago. So net, do you still see an upside? And if yes, which are the sectors that will lead it? Will it continue to be financials? Because then there as well, there was a worry of contracting NIMs.
I'm not the best person to talk to in terms of what markets will do in the very short to medium term. Anyway, as fund managers, that's not our focus. Our focus is to try and outperform the index, not necessarily predict where it will go in the very short term. So I don't have a view on that. But in terms of the sectors where, I think you have valuations which are still mid-cycle, so they're not sort of blinking red as yet at this point of time. Financials would certainly count as one. The earnings over there are still coming in quite strongly, and I mean core lending businesses when I talk about financials. So that would be an area where we would remain positive. The same I would say for automobiles, where I think the whole recovery of volumes in automobiles to the levels that we had seen in 2019 prior to a very significant downturn are yet to be achieved in some categories. So I think autos still have the benefit of an earnings cycle which looks powerful. powerful. But again, both financials and auto, I would say valuations are now more in the mid-cycle. And I might sound like a stuck record, but perhaps even the last time I was here, I talked about pharmaceuticals, healthcare as being an area which has gone through a lot of adverse sort of developments. But bottom up, I'm seeing a lot more focus from companies in that area in terms of setting their house in order, getting return on capital back on trajectory. And I think the valuations there are now quite supportive. So that's a contrarian area we would tend to back. Again, not a comment on what any of these sectors might do in the next 1 to 3 months, but I think that's where the context of both earnings and valuations slightly more supportive.
Right. Vetri, since you flagged off autos, one's wondering, I don't know whether you're a biker or you much rather prefer MPVs or SUVs, but the action or competition is clearly heating up in the space, right? With the Invicto launch from Maruti, now Harley Hero combine also giving Eicher a stiff one, as well as, of course, Bajaj Auto too. As an investor though, what would you prefer?
Well, we actually own a little bit of some of all these companies. I think obviously it's Eicher which has come under the most pressure recently because of the entry of two new, very strong competitors. But, I think our case for two-wheelers would premise would rest on two factors. One, I think the low end of the market is yet to fully recover in terms of volume. So I think some companies in the two-wheeler sector will benefit from that. I think certainly Eicher has gone from being the only player in the sort of premium high engine capacity motorbikes to now having three companies. So there could be some readjustment in the near term in terms of how people view growth prospects. But I also think that what we've historically seen is that when you have more people come in, the market actually tends to develop quite well. So in the short term, there could be concerns about the individual company now having to battle to other companies. But in the medium to long term, I actually think three companies battling there will actually broaden and widen the market for premium motorbikes, and all of them can potentially benefit from it. We know that the upper income groups are doing quite well. We can see this in most categories where the top end of spending is doing better than the lower end, and I actually think so much supply coming into a premium category can actually widen and broaden that market quite significantly.
And Vetri, how long a wait before you see a meaningful comeback for IT? I mean, some of the brokerages are also calling it a structural issue, and they're saying not one quarter, but even the second half is going to be, weighing heavy on the IT pack. What do you think?
So two things to look at here, Aisha. One is that, the US economy is proving to be incredibly resilient, right? We've been expecting a recession and there's no sign of that recession now for, quite a few quarters. So, I think at some point we've got to readjust our thoughts about, is the US economy actually going to have a significant recession that could cause a cutback in business spending? Now, I think some of those pressures are already showing up in companies, the commentary that they are giving, and sort of what is built into earnings expectations. But Aisha, at heart, when things get pounded up, when the news flow is adverse, is when I think the better opportunities get created. So I would tend to believe that IT is an area to look at incrementally positively. Maybe the window is slightly wide, it's broad, so take your time over the next 3-6 months to sort of increase allocations. But let's not forget one thing. This is the one sector which has created the most globally competitive companies out of India. This is a sector which has learned how to ride every wave of IT change and transition. And I do think I would tend to bet that they can do it again. But yes, you could use some adverse news flow over the next 6 months to increase positions. But incrementally, I am more constructive into bad news as opposed to being negative.
Fair enough. Vetri, hi morning. Wanted to also understand your outlook on the entire pharma space. After the recent underperformance, there have been a lot of positive developments. The China plus one sentiment, the push from the government via the PLI sector, etc. Are the fortunes changing, particularly in favor of domestic pharma?
So that's an interesting question. And, I think one of the things even I should caveat here is when we look at domestic pharma and healthcare, it's a very, very disparate sector. And you've had some parts like hospitals do amazingly well over the last 18 months, but sort of core pharmaceutical, whether it's domestic, export oriented, they've underperformed. Diagnostics have underperformed. But I think what we are seeing over there is more bottom up, which is to say, I'm seeing companies now focus on brass tacks, getting the cash flow in place, making the right capital allocation decisions, and looking to improve ROC. And that's kind of the environment historically I've associated with very positive outcomes over the near to medium term. So I would tend to be positive on stuff which is more domestically oriented, be it domestic pharma, formulations, or diagnostics. But equally, I would say even the export area to me is now looking more interesting. I'm talking about generics to developed markets, because we are clearly seeing that in those markets now many companies have started to vacate space, and therefore there's a lot more sensible stuff happening as far as generic pricing is concerned. So again, for all these reasons, I think this is an area which is worthy of attention on a contrarian basis.
Since you're talking about exports, and this is in pharma, but what about exports in manufacturing? Because that's been one big theme that everybody is banking on suddenly. Don't you think it's become a bit of an overcrowded trade?
Well, I'd have to agree with you. I'm somebody who's always sort of worried when something just comes top down in terms of, this is a new theme, because very often these tend to sort of misfire at a macro basis. But if you're able to pick companies which ex ante, which means even before the event were competitive, then actually when you see significant changes take place in macro, they can actually accelerate through those transitions. So I would tend to be a little skeptical about the broad implications of a dramatic change in manufacturing, but without doubt, the winds are more positive for companies in India. But I'm not going to change my sort of, area in which I would invest. I would rather stick with the companies that have already demonstrated their competitiveness, rather than bet that a whole lot of uncompetitive companies and businesses which have not made their mark globally are suddenly going to acquire the chops to be competitive simply because it's become a national imperative or a policy imperative. So, that's the way I tend to think about this.
What about the outlook on the overall banking sector? Do you believe that, large cap banks are looking like strong compounding stories?
I think in the banking area, I would, just sort of stick with the nuts and bolts of companies which have great liability franchises, because, that's the fuel which actually keeps you driving through the cycle. And of course, when I look at banks today, the top 6 banks in the country are accounting for close to 3/4 of incremental deposit mobilization and credit growth. So the sector has become unbelievably concentrated. I do think it also gives them a degree of pricing power. They have fantastic liability franchises, and therefore I'd like to remain concentrated there. Now, there is an argument that, maybe the RBI pivots at times, rates come down, environment for NBFCs might get slightly more positive, maybe at the margin, but I think the fundamental argument, I would tend to support the big banks rather than, try to look at a cyclical play.
Okay, and Vetri, before I let you go, just tell me, what do you believe is the most overrated sector and the most underrated sector at this point of time?
That's an interesting one. Well, I think underrated, as I said, that pharma healthcare space is already there. Maybe IT getting to that space. What is looking overvalued to my mind, I'm quite concerned about some of the names that I see in capital goods. The valuations are completely off the charts. Now, I know that Indian companies are well placed to step on capex, but when valuations are very, very rich, they've already incorporated that upside into their numbers. And therefore, anything which could then cause us to reevaluate potential growth over the next few years could come as a setback to those sky high valuations. So there's one area where I'm a little bit muted in terms of what the valuations are telling me. It would sort of be in that capital goods area.
Appreciate your time. Thanks very much for joining in and sharing with us your outlook on the markets as well as individual sectors. That's the take coming in from Vetri Subramanyam, but a quick check-in as to what the market is up to. And for now, as we're holding out in trade, names like Vedanta continue to reel under pressure, largely on the back of the Foxconn JV news. You've also got just literally 3 stocks that are declining, or 4 stocks that are declining in today's trading session on the Nifty 50. Hero MotoCorp, UPL, Wipro and JSW Steel to a certain extent. But otherwise, there's a lot of support coming in from heavyweights like the Bajaj twins. You've also got Eicher Motors, Tata Motors back to their winning ways. And those are some of the other stocks that are looking attractive in trade, along with an Nifty Bank and, of course, Reliance Industries. That's a buzz in trade. But let's understand right now whether or not after hitting those recent peaks, where we're headed. Is there more legs to the bull run? Are we in for consolidation? What's the view on the Nifty Bank Index? Gautam Shah now joins in on the show to discuss just that. Hi Gautam, good to have you with us. I believe your view is that as of now, you're not expecting any fireworks on the index. So do you think that given that we've already popped the bubbly, now it's time for a bit of consolidation and that's perhaps inevitable?
Good morning. I think we are seeing fireworks in stocks. I think that's really the best way to describe the markets in the last couple of months. On the index front, I think we've run up really hard in the last 7 to 8 days. And therefore, there might not be significant room on the upside because the levels of 19,600 clearly will be a bit of a problem from a short-term perspective. But I think eventually the number will get cleared and we are working with a slightly bigger target of about 20,400. But as we've been maintaining for the last 6 weeks, this is about stocks, this is about themes, this is about sectors. You know, index in percentage terms isn't going to do anything special. And at the same time, you do have a lot of support on the downside. So there are no signs of topping out. The market looks very well protected by a number of index heavyweight stocks. I mean, look at what Reliance has done in the last 1 week. And I do see the IT stock come back as well. So the index, I think, broadly will be in that 18,900, 19,600 kind of a band for the time being. And eventually we head towards 2,400. But in this very period, I think we are actually focusing on the recent underperformers. So we love the metal space, we love pharma, we love IT, and we also like the auto space. So these pockets we are betting on the long side.
Food for thought there, Gautam. Let's take it one by one. Starting with Reliance itself, you talked about how it's a very, very stock-specific market. So talk to us about that. What's your take on Reliance? Is it headed to those all-time high levels, surpassing that, maybe 3,000 on the cards?
See, you've seen a lot of stock rotation and sector rotation in the recent past, and therefore the baton is being passed from time to various stocks and various sectors. So that's really what has happened to Reliance. It was an underperformer for a very long time. It's come back in the recent past. And this 28-50 area is a very important resistance. To be honest, I'm not still very gung-ho on Reliance. I don't think the stock can really do anything special from here. It could see a bit of a move, maybe another 5-7%. But the bigger opportunities is in some of the other sectors. So Reliance, I think it's just made a comeback. It's covered up for the recent underperformance. But unless it really gets past 28-50, I don't think something special is going to happen.
The outlook then? You're saying you need to be stock specific, you need to be theme specific. Let's get stock specific, Gautam. Which stocks should one look at?
Well, we are very closely looking at the metal space. Now, I think this is more of a contra view, I would say, because not many market participants are too excited about it. But the way we read the charts, I think a special move is coming. You're already seeing JSW Steel do so well, trading at lifetime highs and clearly good for a lot more. We also like the way Tata Steel is shaping up. We like the way SAIL is shaping up. And JSPL has been a favorite all along. So I think these 4 or 5 stocks which I mentioned have the potential to move up 12-15% from current levels. So that's clearly the focus area. And, you know, aside of that, I think pharma has been our poster boy for the last couple of months. We've seen special moves there, Dr. Reddy's, Glenmark, DB's Lab. And I think it's going to get better. So our working target of the pharma index is about 15,000 to 15,500. So clearly there is a lot of room on the upside. Please understand, while the Nifty is already at life high, some of these sectors have a lot of catch up to do. So we are avoiding the high flyers like FMCG, infra, you know, capital goods, which have already run up in the last 2 months, and focusing on some of these, other names.
Pharma being the poster boy, but the poster boy of the big rally in the last 1 month has been clearly the auto space. Do you think it's getting a bit frothy there? Most of the stocks, whether it's M&M, Bajaj Auto, Tata Motors, they're all sitting at record high levels. Do you see them going up further, or a bit of consolidation, profit booking is warranted?
No, I think they will continue to run up. I think this is a very special, mature kind of a move that you're seeing in the auto space. And it was coming for a very long time because a stock like Tata Motors was in a sort of a range for a year. It underperformed for a long period of time, and therefore it really, broke the shackles, I would say, a month back. And thereafter, it's just no looking back for Tata Motors. And I do believe that even from these levels, you could at least see a 20-25% up move, maybe even four figures if you have a 2-year kind of a time frame. Maruti, we love. M&M has been doing all the good things. Bajaj Auto is at 5,000, and I think is looking good for a lot more. I think that stock is also setting up. So on an overall basis, if you really look at the auto index, there is clearly a lot more upside. The index took 2 years to cross some important levels, and therefore I think the ratio chart versus the Nifty has shaped up really well, and our working target is about 17,200.
Gautam, what happens to banks now? I mean, you fleetingly mentioned Bajaj Finance, but in the pure play banking space, can HDFC Bank now do the magic, considering it's a behemoth and a combined entity soon? Or do you think there is any other banking stock which is going to show leadership?
See, a month back, there was this concern that the Nifty was going up and banks were not participating. Remember that 6-week period wherein the bank Nifty was absolutely flat. And thereafter, once that 44,000 number got taken out, and the way some of these top banks, including HDFC Bank, which just rebounded from the 200-day exponential moving average, it told you that it was just a resting phase before the next move up. So I think the recent breakout was genuine. And I do believe that the banks can lead the market higher from current levels. In fact, our working target of the bank Nifty is about 47,500 to 48,000. There is a bit of a bump around that 45,500 number. Once that gets cleared, I think there is no looking back. And because it's covering up for 3 months of underperformance, the scope is huge. So I think we actually love SBI. We like the way ICICI Bank is placed at this point. And HDFC Bank, I think, pretty much is a no-brainer. It'll take time. It will not give you momentum, but definitely gives you stability to your portfolio.
Financials itself, do you have a preference over PSU versus private?
See, off late, I think we believe that the PSU theme is huge. It's played out beautifully over the last 6 months, and it's going to get bigger and bigger. I think we've all seen what HAL, the PFCs, the RECs, the BELs of the world have done, Coal India, NTPC, Power Grid. We like all of these stocks. I think as a basket, we feel that over the next 6 months, there's going to be a lot of upside. But the recent trend that I've noticed in the last 1 week is the comeback of PSU banks. So I think SBI, Canara Bank, BOB definitely fit the bill. And I think there could be a trading opportunity there. I'm not very sure from a buy and hold perspective, but definitely a trade is there for the next 2 to 3 months.
Gautam, what happens to IT? Does it continue to get slapped around and weigh heavy on the markets? Given that tomorrow we're going to kickstart IT earnings as well with TCS and HCL.
I'm quite optimistic, to be honest. I just feel when I look at the ratio charts, which is IT index divided by the Nifty, it is at a 10-year low. So it just tells you that we are at an inflection point. Either it moves big from here, it sees a mega turnaround and does well over the next 6 to 12 months, which is actually my view. Or if the breakdown happens on account of average or below average results, that would be a bit concern. But the way we study the charts, I think the downside potential is 5% and the upside potential is 20% for most of the top large cap IT stocks. So with a 1:4 kind of a risk reward at a 19,400, 19,500 index, IT is a buy from an investment perspective.
Gautam, what's your view in this entire fight of mid-caps versus large caps? Mid-caps had done quite well over the last couple of months, but now large caps are also participating. If you had to take a pick, large cap versus mid-cap, what would you pick?
Well, as a technician, it's very easy. I will just pick mid-caps and small caps over the large caps because, we love using the ratio charts. And if you do a mid-cap index divided by the Nifty, you'll see that chart is upward sloping and there is room for a lot more upside. So I think for the rest of this year, I do have great visibility for the mid-caps and small caps, and I think they will continue to run. In fact, I'm reminded of the 2017 and 2007 period, wherein in those years, if you remember, the index did nothing and stocks just continued to move higher the entire year. 2023 for mid-caps and small caps is looking something like that. So the market on an index level will keep scaring you from time to time. And anyway, the valuations, some people say, are a little extended, which I think is a fair argument. But mid-caps, small caps have a lot of room because in the last 2 years, the damage was huge. And I think they were under-owned. So there's going to be a lot of money flowing in there.
the entire defense and railway sector? Are those stocks getting a little overheated?
I think railway is definitely overdone. So I wouldn't be looking at these prices. In fact, our recommendation is to take profits in the railway stocks. But defense is a very big theme. Defense is the theme for the next 3 to 5 years. So I don't think that's going anywhere soon. So I think stocks like HAL definitely fit the bill even at current levels. Just be careful in terms of your timing, because it's more from a long-term perspective. But so in a nutshell, avoid railway, but definitely buy defense.
Okay, appreciate your time. That's some stock-specific takes coming in from Gautam Shah, talking about a positive view on the likes of JSW Steel, Tata Steel, SAIL, bullish on stocks within the financial space as well as autos. But let's move right on then and keep the spotlight on Tata Motors. Hear it out from Pankaj Pandey, and as well as the view from Nishchal Maheshwari as to how he's looking at trends within the realty space.
I think it's been one of our top performers. Our target on Tata Motors is 700 rupees. Now, when you sort of look at JLR, volumes are 93,000. So I think it is better than what even the management had guided, or even what we had taken at about 90,000 odd. And good part also is that on the domestic side, some of the laggard segment like CV, the volume growth was quite decent. And margin profile there is sort of improving for almost all the players. I mean, not only for Tata Motors, but even for Ashok Leyland or even for Eicher. So I think you're getting volume growth, plus you're getting margin improvement. And I think given the fact that overall capex as a cycle is still looking quite good, so our sense is that Tata Motors will sort of continue to sort of do well. And along with, yes, obviously you have triggers in terms of Tata Technologies getting listed. So I think we continue to sort of like Tata Motors, and our sense is that 700 is on the horizon for this stock.
We continue to be positive on real estate. I think the cycle has turned, and this is unlike other sectors. Real estate cycle historically has been at least 5 to 7 years. So I think this is maybe the second year as far as real estate upturn is concerned. So I continue to believe basically that at least the initial phase, you will find strong growth coming in. There is a lot of pent-up demand in the system. I think there was some slip up basically because the rates went up too fast. So you will see some cooling off happening, but I think the underlying demand continues to remain strong. As far as the sector top picks are concerned, we continue to like Godrej, Shobha, and Macrotech in that order.
Okay, and let's hear it out from Krishna Kumar Karwa as well from MK Global Financial Services. He shares with us his take on sectors he finds most underrated as well as most overrated.
I think some of the sectors which in the last 2 years have not done well, and of late, at least valuation seems to be in their favor, and we have seen some move already coming in. So I have been talking about insurance sector for some time, and now it has started playing out, where the margin of safety was very high in terms of the valuation. So that was one segment where we could see. Another segment, I think, which has not done well in the last 12 to 18 months, relatively smaller segment, but again, the whole agrochemical space, for various reasons, including supply chain. I mean, overall glut in the overall ecosystem globally, and poor monsoons, etc., overall. But I think the valuations of many of those companies have come down to very attractive levels. So this is where some valuations should favor you. Otherwise, in your banking sector, yes, the smaller banks, I think they do offer you opportunities where valuations are still very reasonable. Growth momentum seems to be good. So maybe a catch-up trade could happen over there. But having said that, I think opportunities to invest are becoming very, very limited because valuations don't seem to be in favor. Most of the run-up has already happened, and wherever there is a momentum, I think stocks are discounting maybe 2 years and 3 years in advance. So I think investors need to be very careful in terms of deploying fresh money. In fact, this could be an opportunity for many investors to look to cash out in segments of the market where the discounting is more than 2 years.
Interesting. Keki, similarly wanted to understand, where do you sense that there is now exuberance in the market? Any sectors which you think are overrated at this juncture, and you could burn your hands if you continue to deploy more money or even hold those positions?
Really, if you look at the whole, I don't deny the opportunity as far as the defense opportunity is concerned, but look at the valuations of many of those companies. I think there's clearly a sense of exuberance which is prevalent in that segment of the market. So yeah, I mean, you have one buyer and not no guarantee on cash flows for order books and all to value companies based on incoming orders. I don't think so. That's the right way to look at companies. So that's one segment where clearly there seems to be a lot of over exuberance, which we can possibly see. Otherwise, also, I think some of these manufacturing, electronic manufacturing, what they call, I think there again, valuation seems to be, the opportunity seems to be very good, but the valuations again have gone ahead of the curve. My sense is there should be some correction or some consolidation which should happen. So yeah, I think you'll have to go stock specific, sector specific to come to a conclusion. But you don't find opportunities to buy. Let's put it the other way.
Morning. I also wanted to understand your outlook on the manufacturing sector. Do you believe that there are strong tailwinds going down the line?
So we have been positive on the whole manufacturing opportunity for the last 12 to 18 months, and it has played out well. There are investors have on the overall portfolio made maybe 35 to 40% kind of returns, substantially outperforming the.
Okay, let's move on and let's discuss what's really happening when it comes to the power sector in particular. Remember, power demand in the month of June has grown almost about 4.5% on a year-on-year basis, and the peak demand has also touched the lifetime high in the month of June. So when it comes to thermal power PLFs as well, they're at around 70% of the coal stocks at 13 days. And in the first quarter itself, we've seen a good surge in power demand. So what does it really spell for companies like NHPC? Let me welcome on board Mr. R.P. Goyal, the Director of Finance at NHPC, joining us on the show right now. Mr. Goyal, pleasure to have you today on ET Now. Thank you so much for taking the time out. Tell us about, firstly, the status of your Subansiri lower hydro electric project, that's Arunachal Pradesh, Assam. The last report suggested that 90% of the work has already been completed. When does it get added to your regulated equity, and when does the actual generation begin from that particular plant?
Good morning. Our Subansiri lower project is the biggest hydro project of country. Its capacity is 2000 megawatt, and we are planning to commission 2 units of this project in December 23, and rest of 6 units will be added in the calendar year 24. So full capacity will be added by December 24, and full year financial benefit will be available in FY 25-26. So we will be generating around 7,200 million units of electricity on full commissioning of this project.
Okay, so you're expecting 2 units to start by December of this year itself and the full commissioning to happen by December of next year, so FY25. But before I move forward, sir, I wanted to understand from you what the ground situation is with respect to the kind of floods and the heavy rainfall that we have seen in Himachal Pradesh. You have a lot of exposure there. What is it doing to your own assets and infrastructure on ground, and what will be the impact on the company?
Actually, there are heavy rainfalls in north. We have reviewed all the power stations yesterday only, and we are fully geared up to handle any type of situation. And we are not seeing any risk to our power stations, and our assets are fully secured. Our teams are watching everything on day and night basis.
For as far as the situation in Himachal, etc. is concerned, but talk to me about the Parvati 2 project as well. Do you expect some sort of delay in commissioning of that on account of what's happening on the ground? What's the timeline for the commencement of the Parvati 2 project?
Parvati 2 project has completed its 99% work. Only 65 meter of tunneling is left out, and 3 kilometer of concrete lining is to be done. So, as per our plan, we will daylight the tunnel in by August 15th, and project will be commissioned in March 24. Full commissioning will be done in March 24 because everything is in place. Only tunneling is to be completed. That as per our plan, it will be completed in March 24, and full year benefit will be available in 24-25.
Mr. Goyal, apart from Parvati as well as Subansiri, which are the other capacity additions which are currently underway? And more importantly, are you on track with your capex target of 11,000 crore rupees for the full fiscal?
Yes, we will be having capex of 10,800 crore in FY 23-24 on consolidated basis, and we are going as per our plan. We have already incurred around 19% of the annual capex in first quarter, and our capex is generally back-ended because in monsoon period capex remains lower, but after over of monsoon, our capex suited up.
Okay, so given that the capex is on track, 10,800 for this year, if I look at the next 3 to 5 years, after this Subansiri as well as Parvati comes on board, what would be the total regulated equity as well as capacity at NHPC?
After commissioning of Parvati and Subansiri, our regulated equity will be around 24,000 crore. And in next 5 years, our capacity will be double. At present, we are 7,000 plus megawatt, and in next 5 years, our capacity will be 14,000 megawatt. And in the same ratio, we expect that our revenue will be double, and bottom line will also be double.
The bottom line will become double over the course of next 5 years, right?
Next 5 years, yes.
Fair enough. Talk to me about the other projects as well. I understand that you've signed a lot of MOUs, a lot of tie-ups with a lot of states, and not just for hydro, but pump storage as well, other renewable capacities like Rajasthan, etc. as well. What's your plan with respect to the non-hydro vertical? How do you see that expanding?
We have entered in MOU recently with state of Orissa, Maharashtra, Andhra Pradesh, and also exploring certain projects in Gujarat. In addition to that, we have entered in MOU with MP government, and one of the projects has already been allocated to our subsidiary company. So, taking together all the pump storage projects, we are exploring around 20,000 megawatt capacity. And out of that, we are sure that in next 2 years, we will start at least 3-4 projects with the installed capacity of 3,000 megawatt to 4,000 megawatt. Or on solar front, we are already doing 1,100 megawatt, which is under construction in the state of Gujarat, Rajasthan, and Andhra Pradesh. And we have entered in MOU with the Rajasthan government for solar project further. But we are since we are basically a hydro company, our main thrust will be on hydro. But in case of solar, we will do selective projects, keeping our return on equity at least 12%.
So in the next 5 years, it is hydropower which is going to continue to remain your biggest revenue contributor, right? If I'm getting this right. And if you could give us some indication on what the pie is going to be in terms of how much contribution can we see from hydro and how much from solar?
You can take it 80-20. We will have 80% capacity from hydro and 20% from other sources.
So the split is going to be 80-20. Sir, before I let you go, I wanted your clarifications on a couple of matters. We are hearing from reports that the integration plans of NHPC with THDC as well as NEEPCO are underway. Have you been able to make that proposal to the ministry? What's been the update like for that major integration?
We are doing this initial study to integrate the hydro and make it a big hydro company, but it is at very initial stage. If it is beneficial to the shareholders, certainly we will do, and we will share the information with the market in due course of time.
Is it expected to happen over the course of next 6 to 12 months itself, or is it a very long-term plan? Because I think the merger with Lanco Teesta has also not got the MC approval yet.
length of system merger is in very advanced stage. Only shareholder and separate creditors meeting is to be done, which we have planned in next 1.5 months. But so far integration of TSDC and NIPCO is concerned, it will take time. It is at very initial stage.
That's at very initial stage, will take time. And quickly before we let you go, a couple of other data points that I need from you. A, with respect to the dividend yield policy, will that continue to be at similar level as right now, or can we expect an uptick there? And secondly, with respect to the outstanding receivables situation, how is that developing?
As per DIPAM policy, we will continue to pay dividend. That is 5% of net worth or 30% of profit, which is higher. So as we have planned our capex, keeping the dividend payment as per government policy only. And so far debtors is concerned, as on date, we have 1800 crore number of debtors, out of which overdues are only 130 crore. So debtors, outstanding debtors is not issue after notification of new late payment surcharge rules made by Government of India.
Just to repeat that number, the total outstanding is 1800 crores and the overdue is just 130 crore now?
Yes, you are right.
Okay.
Okay, Mr. Goyal, great to have you today on ET Now. Thank you so much for taking the time out.
Thank you. Thank you.
Okay, let's carry on the discussion forward, and we have with us Harshvardhan Dole as well, joining in from IIFL Securities. Harshvardhan, great to have you on ET Now. Firstly, your takeaways. We just had the NHPC management, and I think you did catch a part of that conversation.
So as a stock, we like NHPC. It's a great, yield co. And the way we see things, hydro will only gain prominence for the fact that if the share of renewable were to increase here on, you would require, peaking support from hydro or pump storage hydro. And to that extent, the government policies will be much more accommodative, much more conducive than what they were, relative to, prior, periods. We have also seen aggression from NHPC management to, fast track the projects which were stalled and, take them to logical conclusion. We have also seen them quite active in terms of acquiring projects, which ensure that there is a growth beyond the projects which are basically under pipeline. So in all, looks to be a fairly good story. And most importantly, it's a clean and green story. So a lot of investors seem to be having an appetite for the same.
Okay, so NHPC is a great, clean and neat story with a lot of upside potential, aggression being shown by the management as well. But for the overall sector itself, Harsh, we are seeing a bit of a transition, right? Street seems to be a lot more excited about green hydrogen, the pump storage, etc. A lot of chatter around JSW Energy as well. What are you hearing in terms of the investor interest right now? What are the decision-making criteria that they are looking at?
See, frankly, the way Indian power sector is playing out, the fundamentals are clearly changing, and these are changing in the benefit of the generators. Say 5 years ago, relative to the demand, supply was just bunching up, and there was huge underutilized capacity. Over the last few years, the demand has grown up, and the supply has not caught up. And now you're at a situation that if the supply doesn't improve, 2 to 3 years out, you are basically facing a severe energy deficit. So investors love this kind of scenario whereby an advantage is in the favor of the industry. And they're trying to explore what are the possible ways in which one can play this theme. What we are recommending to investors is, given the fact that the merchant story is no longer available to play in India, let's take a slightly holistic view and stick to the companies who have got solid balance sheets and an impeccable revenue model. And these are surely the PSUs, which is NTPC, Power Grid, to an extent even NHPC, which will give you capacity-based stable earnings growth, a good dividend yield, and their valuations are still not, as expensive as, some of these mid and small cap companies are trading at. And to that extent, we continue to like these companies over some of the private sector names where the revenue model seems to be slightly risky.
Harshvardhan, traditionally the concern with the power sector always used to be that it's a PSU, the entire sector that is. So government intervention, change in policies, etc., run as a risk. And the other one, of course, was the financial health of the sector per se as well. Now, to add to that, there are this competition from the private players too. You think those overhangs are now behind us?
See, at least there is, apart from maybe Tata Power, Torrent, and CESC, and of course JSW Energy, which is making a huge investment on the renewable side. On the traditional thermal as well as regulated revenue model, there are no great plays available, and frankly the investor seems to have lost appetite for taking a riskier bet in the sector. And to that extent, this is sort of, there is no alternative, and by default investors are opting for relatively low risky but solid growth potential revenue models, which are Power Grid and NTPC.
So does that remain your top pick as well, NTPC, Power Grid, and what's the pecking order in rest of the private sector names?
So NTPC is our top sector pick. We also like Power Grid, but one has to be mindful of the valuations in the near term. The way stock has outperformed the broader markets in last 1 month, I think we'll be more comfortable buying it slightly cheaper. But if one is not too mindful on the valuation, still a good stock to own. Torrent Power is one name that we're extremely upbeat on the private sector segment. For the simple reason, this company has grown the financials without diluting equity, and they have managed to balance growth as well as return ratios to the overall shareholders. The market cap may not be as big as NTPC, or the liquidity may not be as enticing as that of Power Grid. But if somebody is looking for a mid-cap exposure, I think that's a name that stands out certainly well amongst all the private sector names that we cover.
Have you managed to look at this entire smart metering play? We were discussing that with the management at Genus Power as well. HPL Electric has run up. I know these are very small stocks to come under your coverage, but in terms of the investor interest, is it peaking?
There is. See, again, the whole power story can be played through multiple ways. Either you own the traditional utilities, or you end up owning these supplier or the vendor base who initially benefit disproportionately out of the capex that the utilities are doing. So smart metering is one such way to play the whole power sector theme. Honestly, I haven't looked at those couple of names which are listed, but in general the space is quite promising.
And Harsh, it'll be remiss of me if I didn't ask you about Reliance, because you track that one also very closely. We saw quite a bit of up move yesterday. Today that stock is trending higher. Is that something in results that people are expecting? Is that the entire value unlocking which is at play? Your call on Reliance?
So we are forecasting YOY flattish or slightly declining first quarter. That's mainly because last year O2C base was significantly stronger. But that's been offset by strength in the B2C businesses. And to that extent, the broader number should be, okay, if not exciting. But the second half should be quite more promising, because the gas production improves, and hopefully the core B2, the O2C business should be much stronger than what we are seeing in the first half. On broader basis, I think the call is what possible announcement may come through in the AGM, which probably is, say, a month out. So all eyes on the AGM, and that will be the key trigger for the stock's outperformance from here on.
So net, what is the target that you have in mind for Reliance, and what's your view of the entire unlocking that has played out over the last couple of days with the demerger of the financial services record date, Reliance Retail, the valuation pegged?
See, we value Reliance Retail closer to about $105 to $110 billion on an aggregate basis. So the valuation that seems to be, in media is more or less in sync, or rather our valuation is more or less in sync with what the media seems to be reporting. And there is very less delta to be, played through that particular initiative or that basically news flow. But the good point is the first demerger is basically underway, and hopefully this should kickstart, the spate of demergers that investors are looking forward. In my opinion, next 12 to 18 months are going to be quite interesting because each of these initiatives, be it geo, be it even retail, are approaching that critical mass, whereby there is a good possibility that they may be listed separately in probably next 12 to 18 months time. So we have a positive bias on the stock, and while the stock is now trading closer to our base case sum of the parts, which is close to 2,800 rupees a share, typically, we'll look forward to revise this subsequent to the first quarter numbers.
Interesting. Harsh, great to have you on the show today. Thanks as always for taking the time out and joining in. Okay, let's move on. Let's address what the overall market is looking like. Started off mildly in the green and nicely have picked up since. In fact, on our way once again to that 19,500 print, just 25 points shy from that mark. Look at Tata.com. That stock has surged 4.25% as we speak. Good move on a TVS Motor, on a Polycab, IDFC, ABB. It's an interesting bunch of names which are actually lifting the broader markets up. The breadth, of course, is very strong. You've got a 149 count within the F&O basket. And within the large caps, it's HDFC Life, 2% higher there. Britannia, Sun Pharma, Bajaj Finance, Maruti, L&T, Eicher. These are the ones which are the contributors to today's move. Interestingly, Infosys is holding out 1% higher ahead of TCS's numbers tomorrow. Under pressure, of course, for UPL, for HCL once again, for Wipro, SBI is lackluster, Tata Steel, Axis as well are at bay. But let's address some buzzing stocks and find out what a Chartists have identified. Naresh, the chart buster on your radar?
So that's a chart for BHEL. That's a weekly chart for the last many years. Now, if you look at it, it's a classical rounding bottom formation. The stock has been in a downtrend ever since 2007 as well as in 2014-15. And now finally, after many years, the stock is turning around in a big way. It went all the way to 25-30 levels in 2020. 80 to 90 has been a band which has been a problem zone for the stock for the last almost 2019 to 2023. Even the last time we saw it pull back from 80-90 zones back to 70. And now finally we are sustaining about 90 mark. This indicates a long-term trend change and a move wherein it could surprise on the upside over the next 1 year, over the next 6 months also. So an accumulated 87 to 94 band, a stop loss at 84 and the minimum target price of 120 to 150.
Okay, let's find out those individual stock recommendations as well. And Naresh, what's looking good?
So first is a buy on Bharat Forge showing momentum crossing the recent swing high, stop loss at 845, target price of 900. Second is a buy on RBL Bank, getting close to that 190, 194 major resistance breakout, stop loss at 185, target price of 220.
Right, let's get in some stock ideas from Kunal as well. Kunal, the stock list, and of course the chart buster idea too.
So on the charts, I would be discussing Sun Pharma, again, a classical sign of a breakout for the stock. Interestingly, for the last so many months, the stock was taking a major resistance at this 1,060-70 mark. And finally, this is the third attempt for Sun Pharma. And this time around, the entire pharma sector is looking attractive. So I would expect Sun Pharma to get into a breakout mode. And on the breakout, the stock would not just confirm a fresh multi-year swing high breakout, but then possibility of the stock timing up another 10% in a span of the next 6 months to 1 year could be a very strong possibility for Sun Pharma. So it's a strong breakout candidate from current levels.
Okay, that's the chart buster idea. But Kunal, let's also get cracking with some of those other stock recommendations.
So a couple of buy calls on the mid-cap space. ABFRL is a stock which has confirmed a bottom out formation. So would suggest a buy with a target of 230. Stop loss could be kept at 213. And the second would be by an IDFC First Bank. Again, a classical breakout mode for the stock after a week or two of consolidation, making a very strong comeback, which I think should take the stock back towards at least 88 over the near term. Stop loss to be kept at 77.
Okay, on that note, we're going to take a very quick break. We're nicely climbing up and building on to that quiet start for us. 0.5% higher, back at 19,500, at least for the Nifty futures, and on our way to that mark for the Nifty spot as well. On that note, we'll take a break but come right back. Lots more lined up on the other side.